some of the key headwinds in the quarter gone by, as well as the growth outlook for the company going forward. Good to have you on board. And I think, investors would be fairly curious to know your outlook, given that this time around in the quarter, the biggest disappointment was the fact that your margins declined very sharply. Now, analysts seem worried that this decline is actually going to be structural in nature, given the fact that utilization, travel back to office, etc., the costs are still normalizing. What is your estimate? Can you clarify for us where margins could sustain?
Good morning and good morning to your viewers. I think we've always talked about the margins in upward of 30% being not sustainable in the midterm to long term, right? And costs will definitely come back, especially as employees return back to work. We've had to invest, of course, in new office spaces. At the same time, if you look at the quarter gone by, we have invested heavily for the future quarters. We've added upwards of 1,500 employees. All those costs, increases have actually affected the Q2. And if you look at it, we are still at respectable, if you look at our EBITDA margins, upwards of 29%, our PBT is 28%. So I think we're still in a very respectable zone. From a future outlook perspective, we will definitely be, around the 26 to 28%, right? That's what we would look at, because definitely travel would continue to increase. We will have, a lot more employees coming back. Currently, we are operating at about close to 60%. We would expect moving forward this number to go up to about 75-80%. We definitely are adding more office spaces, and all those costs will definitely come in. Of course, we expect that part of that cost will be taken care by growth in revenues and so on, more operational efficiencies. I think last quarter we've also had a hit because of the both euro and GBP, the situation in the currency. Of course, USD was beneficial, but it was we have a significant portion of our billings coming in from GBP and euro. So I think if you look at all the factors that went in, we've had a very, very respectable quarter, and I'm pretty happy with the situation where we are.
Okay, so 30%, can I say that is the basic line in the sand, and Tata Elxsi soon could go back to 30% margins?
No. I've never stated that we will go back. I mean,
I'm asking you. You never stated that.
No.
That's my follow-up question.
No. We don't. Number one, we don't give margin guidance, and number two, it's unreasonable to expect when costs are going up to be able to have such an high margins.
Can you quantify for us that the fact that employees are coming back to the office, how much of that was captured in the last quarter, and how much of that will be captured in coming quarters? Because the number you shared with us is about 60%, which means 40% workforce will still come back, which means the current quarter and coming quarters also, this entire migration will start impacting your cost.
So what we've done is from October 1st, we moved to a hybrid work situation. It is not that the employees would come full time. They come 2 to 3 days in a week. So at this point in time, I said we have about 60% of our, if you look at the unique individuals coming to that office in a week, it's about 60% of our workforce. That will go up to maybe 75 to 80% in the coming quarters. So I think there will be a marginal increase in cost, but I don't think that is significant, because our top line growth should take care of that sort of an incremental addition.
In your con call, since you had mentioned there was softness in media,
yeah.
Apart from media, is there any tough spot which you would like to call out for us, for our viewers and for your shareholders?
No, you look at it, we have four large, businesses. If you look at it, and communication, we have the transportation, we have the medical, and we have the industrial design business, right? So the other three businesses are doing extremely well, and media and communication is a short-term issue. And there were some deferments of deals. I think in a quarter or two, we should, get back to that recovery path there. I have no concerns.
Okay. Now, given the fact that we did see the employee addition, which was at record levels in the quarter, do you think the run rate of the headcount addition is going to continue?
We definitely will be adding headcount because we still believe that if you look at our midterm to long term goals and aspirations, we have to continue to add headcount. I don't think we'll slow down there. We'll continue to add employees in both Q3 and Q4. We do have enough funnel, and we do have deals that we have closed over the last 2 quarters. We definitely need to service them. So I don't think we will slow down in terms of employee additions.
The utilization rate moderated. It's nothing to do with.
Utilization, yeah.
Yeah, why has it come down? It's come down from 84 to about 79.
Yeah. When you add so many employees in a quarter, of course, it'll take time for them to get built. So I think that's not a matter of concern for us. Pre-COVID, we used to even work at 65 to 70% utilization. So 78% is good, but we'll definitely aim to get to 80% and above in the subsequent quarters.
I'm revisiting that point once again. Since 35% of your business is coming from Europe, given where the macro concerns are, winter could be very tough. We don't know which engineering company will be able to function in this kind of a tough energy environment. Since TCS is calling out for a unpredictable business environment from Europe, you are getting 35% of your business from Europe. You feel there is no problem whatsoever?
As of now, we don't see an issue, but definitely macroeconomic conditions, we need to keep, watching out. I talk to all our key customers on a regular basis. There's no other option other than being close to your customer, talking to them regularly, and if any concerns, you take measures immediately, right? So as of today, as we speak, I don't have any concerns from any of our customers in the region. But as you rightly said, the macroeconomic situation is worrying. The winter is coming. You have inflation. You have high gas prices. All of that is definitely worrying. So it's very difficult to talk about midterm to long term how the next 4 quarters would be in Europe. But at this point in time, we don't have any concerns there.
Manoj, so can you go on record and say that all is well and there's nothing wrong with the business and the market is only trying to dissect and find what's wrong, whereas nothing is?
Absolutely. Why would we hire at this record levels if we believe that we are on a weak wicket? I think in a matter of a few quarters, your viewers will get to know.
Sure. So second half onwards, can we expect things to pick up? I mean, do you have that kind of visibility?
How many companies in the IT sector have grown 30%?
Expect the typical seasonality to be at play, because what we are talking to you is about a normal year. Last year was a different year because of the COVID bumper. Before that, there was COVID at play. Historically, there is a seasonality factor which kicks in for all IT companies. Will it be different this year?
No, if you look at it, Q3, there are concerns in terms of long holidays, and that could be furloughs and so on in some of our markets that we operate in. But typically, if you are typically billing on a time and material basis, you have the effect of furloughs and so on. A lot of our engagement is fixed bid and outcome based and so on. So to that extent, we mitigate some of these pressures down, right? So I think at this point in time, 3 of our businesses are doing pretty well. There is a good funnel. There is good traction. One of the businesses has some headwinds, but we are working on it. I don't think that is too much of a concern. And once the projects that are deferred from our customers they get started, we would continue our growth path. So I'm not really worried about that.
Yeah. Manoj, one really has got to doff our hats to the kind of stock performance that you've seen. And I'm sorry I'm getting the stock angle here, because a large part of our viewership is also your shareholders and investors. The stock has corrected more than 50% only 6 times since its listing. in just yesterday and today alone, you've seen a fall in excess of 10% on your stock price. Given that you're so confident about the business, you're obviously hiring more because all is well with your business. What would you want to say to your shareholders right now?
I really don't follow the stock market, and I am not sure why it goes up, why it goes down, and so on, right? So we run our business. We are confident of, delivering performance to our stakeholders. So from my perspective, I know we have a very, very clear focus. We have our strategies laid out. We have a target a year to achieve, and we are right on the dot. What happens in the marketplace, I think it's very difficult to figure out why the stock behaves in that manner. But we don't take decisions based on the stock market, right? So we have our own midterm, long-term goals, and we are laser sharp focused on that, and we continue to really focus on that.
Thank you for taking time out and joining in, giving us a lot more clarity. All is well, and that's clearly one of the big headlines from Tata Elxsi. To VMart,